Good morning, traders. Chris Buss here with your morning look at markets for what do we got? Monday, December 7th. Okay, it's very early this morning as I'm starting the video. It's just a few minutes after 5 o'clock, and we've already had a little excitement this morning over in Europe. The Brexit talks have kind of broken down yet again. I think we're 4 or 5 years into that whole mess over there, and not a lot has been resolved. But anyhow, the market didn't particularly like those headlines, and they pulled about 20 handles out of SPY very quickly, and have spent now about the last half hour starting to nibble back into it higher. So we'll have to see how that plays itself out in the pre-market and the rest of the day. I think for the most part, I think that'll get bought up. We've had so many, Brexit scares and fears through the years, and none of them have amounted to anything. Of course, we'll watch price. That's the ultimate arbiter. So we really don't have to guess whether it's going to mean anything or not. We're going to focus on price levels, not only on the indexes and FANG, but also on any of our particular holdings. And if price comes and takes it out, I mean it takes it out. That's what stops are there for. So let's look at SPY 2 hour. We continue to grind higher within this little wedge that I've got on a 2 hour chart. Finished Friday at the highs, but as we've been pointing out, gentle bearish divergences, price at a new high, RSI at a low compared to back here. And same thing on momentum. We had a momentum high way back here, and momentum has been bleeding off. It's kind of flatlined here, but still at much lower levels than where you'd expect if price were hitting a new high. You'd expect or want to see momentum at least building, and we don't have that yet. So for me, on this time frame, which is an intermediate time frame between short active trading and the daily chart, the line for me is 365. Why? That's the intersection of the gap and this uptrend line. If price falls below 365, I would become very, very cautious and defensive. That would probably mean, at least for me, some of my individual stops being taken out. And moving into this $3 gap, there would be a high probability that this would just go ahead and fill down to 362. So, I mean, that's $10 right there. 370, actually 8. 370 down to 362 is $8. And then from there, anything can happen. If that were to, go down to the next level, we've got more gaps, and really a key support area doesn't come in until 354. So, like anything, I mean, things can happen fast. We just have to key off level by level. And I think that the most important one today on this time frame will be 365 at the top of the gap. Now, zooming down to the 30-minute chart, we have a lot of the same elements. Notice we've got declining momentum and declining RSI, but price at the highs. I've got an intermediate shelf here of support driven off of this high volume over price bar right at 368. Now for active traders, I think you can stay long against 368, but if if it drops below, I think you're going to come back in here to test this uptrend line, and there may not be a whole lot of support to be offered by that line. There doesn't not a lot of reaction points. So I'd probably favor it coming down here to 365, where I'd expect to see at least an initial bounce, but then potentially a gap fill. And, if you're active, what you could do is if you lost 368, take your starter short and see where that goes. Look to cover down at 365. That would be a nice $3, trade to start your day. And then gauge what happens at 365. If it moves below, you can reinitiate a short for another $3. Or if it looks like it's going to hold, you can take an objective long with the stop just below and look for a move back up to 368. Qs. Didn't seem as bullish on Friday as I had hoped. Did mostly just, toggling right under this resistance level at, what is that, 305.50, something like that. It really needs to pop that level and reaccelerate to move to higher ground. We do have negative divergence on the PPO. Don't have it on the RSI. You can see RSI climbing as price has climbed here, so that's positive. But right here, that's definitely your toggle point, 305.50. Right there above is good for longs. Below, they may bring it back in here to 302. Here on the 30-minute chart, this wedge becomes more apparent. I wouldn't want to see price drop down and below, into the 304s. Then there may be an opportunity to move on down to 302 and possibly 300. That would be a nice short trade to take, when and if that were to break. Even, as we talked last week, it all kind of depends on what you're, how you're positioned and, what your posture or objective would be. For instance, if you're sitting in a bunch of longs, FANG longs or technology longs, and you get the breakdown here, maybe all you want to do is put on, a short hedge, see how much you can get out of it, cover, and then that's your protection for your, your long book. If you're more of a active trader and not so much worried about, this portfolio that you're managing, you can kind of size that for, whatever comfort level you have, and use that as a trade to, actually make money for today if that were to happen. IWM had a great couple of days. I got in on this. I had, I think it was Wednesday, I had 182.50 calls. I closed the first rack here up near 184, and then got in the 185s for Friday. Got the push up here, and I sent out a note that, I wanted to roll and protect this position, which I did, into the close. So now I bought an extra week to December 11th, this Friday's expiration, in the 188 calls. Notice the bull cross here on momentum. Notice RSI remains in its bullish regime and pushing higher. I like IWM. I think anything north of 185 is a nice long. And here's the exploded view of it. I do have a little baby shelf here at 187, but the real support is back at 185. If you got a pullback into 185 that held, I think that's a nice objective long try to get in for anybody that hadn't been in already. And look out to December. Actually, I'll have to check that. Now that I think about it, I may have December 188 calls, not the weeklies. I think I may have bought an extra 2 weeks on that. I will check that. So anyways, I'd like it to see it hold this uptrend line. First level of support 187, key support 185. Anything below 185 I would be really worried about. Facebook, I got disappointed in that last week. I was very optimistic with these igniting bars, and they kind of faded it at the back end of the week. It's still a bullish setup, and if you're not in, being long against 280 is a perfectly reasonable place to be. If price were to drop below 280, then that's going to force me out of my position back into the trading range, and you might see a move back down even to the bottom of the box. But as it stands now, we got a breakout and a back test. Nothing more, nothing less. That's bullish. Just for me, though, I was hoping for the the secondary breakout here with a push towards 298, 299. Apple. I am long this one as well. In December, 122.50 calls. Got the igniting candle, but then consolidation the rest of the week. Anything above 121 is bullish. Anything above 123.25 is a breakout, looking for higher ground. Anything below 121 is problematic in my eyes. It should hold this level if it's going to go higher, and I would be probably getting out of my position if 121 failed. So in my mind, 121 is your pivot. Tesla had the big move, consolidation, now back up towards the top of the box. I think 600 is your pivot. You're long above, and you can be short below and then hope for this gap fill. But 580 is your intermediate point there. I would be leaning towards the breakout just as a bias. That doesn't mean I wouldn't be short if it came back down here, but what I mean by that is I'd be looking for long entries. It's a bullish setup. You may see support here at 580. You may see support at 570 on the gap fill, and certainly at 560 would give you an objective level to get long with a stop just below. If price proves you wrong, then you just get out and then flip, because below 560 you got a pretty sizable void back to 502, and that may end up being a really nice winner if price rolls over here and loses 560. Microsoft has just been languishing after this promising ramp. It has spent a couple days hovering around 214. For me, that's really in the middle of the range. Yes, you can draw in a midpoint line here at 214 and use that as your pivot, but in all reality, it's trading in this range between 212 and 216.50, and you're really not going to see much of a sustained move until it breaks out of that area. Amazon, soggy day on Friday, actually Thursday as well, coming back down towards 31.50. Again, the levels have worked great. 31.50 is your pivot. You can be long above and short below with a $50 increment target at each level. So this morning here, anything above 31.50 you can be long and look for 3,200, and if it fails you can look for 3,100 and look for, you know, those $50 increment moves where Amazon has tended to go in recent months. Google, impulsive move higher, multi-day consolidation between 1820 and call it 1835, 1840. I still like this chart. I'm going to be tempted to reinitiate a position this week on Google, either here long against 1820 at the bottom of this box or on a breakout above 1835. I still think this is going to 1875 in that area. I'm still bullish based on the technicals, and really Google's been acting the best of the fangs. Netflix got the big igniting candle, made a push. I was long in here, held through this back test, but then was forced out on this action on Friday. So that trade did not really work out the way I had planned. For new traders or anybody wanting to trade going forward, anything above 494 is bullish, looking for 505 and then a gap fill to 515, but it's got to hold 494, and if it doesn't, then it's back into this, you know, prior trading range, and I wouldn't be surprised if it found 477.50. CRM, this is our bracket trade that we're watching with a big gap above, and we've got some support levels below in the form of the 200 EMA that comes in at 213 on the daily. I'm biased to the long side here. I tried to take a position here Friday and got stopped out as it came back into the box, but I like this long, and I like its chances to fill this $20 gap at some point. Splunk, giant gap down. Now it's consolidating in a very wide range. No trade to make right here in the middle. Wait till price moves towards one of the boundaries before taking a position, so you've got an objective line to shoot against. Futu, we had talked about this being a nice breakout backtest setup. It remains so. It was off 1.5% on Friday, so I think you can be long against 40 with a stop just below, and then look for a move back to the prior high around 50. TLT, as interest rates have worked their way higher, obviously TLT price has worked its way lower, and now we're getting back down to that 154 level, which is key support if you look back, you know, over the last 6 or 8 months. I think this 154 level corresponds to a 10-year bond yield of 1%. If you see yields pop 1%, I think this is going to crack this. And if you put an alarm there, I think that's an objective trade to make. If, you know, if this 154 fails, and for any reason that yields start to take off, I think you're going to get a fast move to the high 140s for starters, where I think that would be a nice trade. So I have 154 alarmed in my system for a heads up. may end up being a long, because support is support until it's broken. So this may be a point to try a long. If yields stall up in the 0.98, 0.99 area and start coming back, that may be a good long to look for a move back to 160. Keep an eye on bonds, even if you don't trade it, because that's going to be a key to our reflation trade, our back to normal reopening trades. A lot of our positions, or positions in that genre, not just ours, anybody's, will move, should have positive reactions to rising yields. One fresh name for your chart book, your focus list, is CIEN. They make fiber optic cables and stuff like that for telecom industry. You can see it had a big drop on earnings back in September and has clawed its way back to this opening level. So earnings are later this week, but there's been option accumulation looking a year out in the 40s, 45s, 50s, and 60 strikes. So all the way up through this gap, there are folks sitting in calls, and they're good numbers too. I mean, they're all between 1,400 and 2,400, looking a year out. So from a technical standpoint, I think you can get long on any kind of gap entry and then see how far it takes us. If you're bold and want to take a position, before earnings, that's fine. Maybe you take something a little farther out of the money in case it goes against you, or a little farther out in time to where your position won't be so time sensitive. If you get something a couple weeks out and they miss and it pulls back, then your stuff is pretty much dead. So I like the setup, though. I like the setup a lot with a big gap and chances to fill that gap, I think are solid. Okay, that does it for the opening look at markets. Let's see how the futures and the pre-market handle this Brexit news. Maybe they'll have that all gobbled up by 9:30 and we'll get back to even keel. But if there's a small drag on the indexes, that's fine. We'll work through it. At least now we have our levels. We know what we're looking at. We know our reaction and decision points. And setting up for the day in your pre-work, that's all you can do. We don't know what may be in store for us, either to the downside or the upside, but having that little game plan put together with the pivots on the names that we're interested in will give us good insight on how to trade during the day, and just key off the levels, not on your opinions, what you think might happen, how far you think it might go. Just go level to level, and if you do that, I think your trading will improve greatly. We've been working with a few individuals in the trading room that kind of mentality is a whole new thing, but I think they're starting to get it, and they're starting to improve with better and more objective trades versus, I think it's going higher, I think it's going lower. So anyways, if you're new to the channel and like what you've heard this morning, please hit the subscribe button and the alarm bell so you don't miss a beat. Also, over in the show notes are links to the blog site where I've got a lot of helpful content in trading psychology and trading tips and tricks that you may want to check out, and also a place to register for my content where you'll get an email each and every time I publish. And we had a couple of new members join over the weekend. Welcome to you, Glenn and Raj. Appreciate you being here. I look forward to working with you in the days and months ahead, and I hope the content moves the ball down the field for your trading. Okay, this has been Chris Buss with Traders Profit Compass. Have a good day of trading, and talk to you soon.